Good morning, ladies, gentlemen, and fellow Earthlings. I'm Paul Mayer, here as always with Harrison Lambert. Happy to welcome you to another edition of the Space Times podcast.
This week in the space industry, we've had some major updates in the launch industry across multiple different fields and domains, some interesting moves in the Earth observation markets, and as always, plenty of business moves and technology advances that we're excited to cover. Paul, would you like to take us away on launch news?
So, to start off here, Northrop Grumman has continued developing their solid rocket motor and test program. They tested the solid rocket motor on December 4th, and that was part of the international program to advance solid rocket propulsion technologies. Interesting to see solid rocket development continuing to be prioritized here, as more often than not, we've seen a lot of excitement and investment in more liquid rocket, though that's prioritized a little bit more, the liquid rocket, for more high altitude and on orbit applications. But glad to see that Northrop Grumman is still developing and sticking to the classics, so to speak.
Yeah, it's traditionally they've been a missile provider. I know they purchased Orbital ATK quite a few years ago, and they were doing rockets with that company. But I think, as we've noted before, solid rockets have sort of fallen out of favor in the launch vehicle industry in America. But we've been talking a lot recently about some growth in that sector around solid rocket motors, around hypersonics, particularly in China and Europe. So I'm wondering if this is kind of a pressure from the outside industry, or if there's a growing need for it inside of America. There's a growing need from the missile industry as we're being engaged in multiple wars, but potentially also in terms of certain space activities like on-orbit interceptors and potentially growth in other forms of launch vehicle providers. So, Northrop Grumman entering, we're scaling up their capability. Certainly makes sense given the news that Lockheed has spent hundreds of millions of dollars between Avio and Ursa, along with Raytheon over the past year or so. So this might just be Northrop trying to keep pace with their main competitors.
Yeah, there's definitely a lot of pressure in the space, primarily driven from, I would argue, allied sources. Pointing towards Avio, pointing towards the development and the relationship that Lockheed has started with Avio. There's obviously globally increased demand from the missile industry for solid rocket capacity and improvements. And I'm optimistic that seeing Northrop Grumman continue to sort of develop their own capabilities and their own capacity here is indicative of both that there are investment in the space, that there's prioritization, that this isn't just increasing the throughput, making more of the same old thing that we've always seen, but that this represents we need improvements upon the traditional thing, and that there's going to be potential applications and development in the hypersonic and launch sectors as well, not explicitly just for the missile and air-based applications. Speaking of hypersonics, Castelion raised $350 million to scale their hypersonic missile production, opening a solid rocket manufacturing plant in New Mexico. So Northrop Grumman, sticking to the classics, so to speak, developing solid rocket motors, and Castelion increasing their capacity and developing solid rocket motors for newer applications in New Mexico, combined with the aforementioned partnership between Lockheed Martin and Avio, means that we're seeing a lot of money and a lot of capacity and capability being developed domestically here, whether that's for launch and exploration or whether that's got more of a defense hint to it will remain to be seen. But I choose to be optimistic that it's for the former rather than the latter.
Yeah, I hope there's applications to space here. I think there's certainly use for it in certain cases. But as they clearly noted, it is for missile production. Hypersonics is a growing interest, particularly under pressure from Chinese technology. But seeing this much money flow into a company is, it's going to go a long way. Besides, besides the fact that like you can only use it once, you're practically burning your money. But the capability makes it constant cash flow. So it's a pretty good business as long as there's a demand there. I don't think anybody's lost money building missiles, so that's why people keep pouring hundreds of millions into it. 350 million puts them somewhere between Ursa Major's 200 million and Avio's like 460 million, and puts them all up and down like the mid-south area of America. I think Ursa's in Colorado.
Avio's planning to move west. Yeah,
Avio's planning to move to Arizona. Castelion's opening New Mexico, so it's that whole kind of area there. I find kind of interesting. I think it's probably good for test ranges. There's not a lot of open land out there to fly them and burn them up in. But New Mexico is particularly interesting. I'm wondering if they're going to be close to the launch base out there, the New Mexico spaceport, which to me, hopefully that would give them more inspiration to build some spacefaring applications for this technology.
Well, I can tell you they're going to be closer to the New Mexico spaceport from the state of New Mexico than they will be from the state of Florida or Texas.
Yeah, but you can just launch anything in those countries, in those states. They're states.
I don't think you misspoke. I think you were right. So in addition to these solid rocket motor developments that we've been talking about, Moonshot Space has also come out of stealth. They raised $12 million in funding, and they're developing a kinetic electromagnetic space launch system that enables in-orbit delivery of critical space resources. So very similar on the surface to our friends at Reditus Space, friends of the show whom we love dearly, and seeing more players enter a space while on its face and on its surface might initially seem like a bad signal for the incumbents and the players already there. It's actually a pretty positive signal. It's a pretty positive sign because it indicates that the product market fit is there, and it's a really validating. It's a very validating event for the ecosystem, for the market, for the product market fit, and for the technology itself. So the fact that we now have two well-funded, well-researched, well-staffed players focusing on solving this in the space is indicative that this is a real market. And as with anything, almost anything hardware related, it's never going to be winner take all. So the fact that there's two people playing here, that there's two well-established startups working in electromagnetic kinetic launch systems to effectively reduce the need for rocket-based launch to ignite at a higher altitude, that really helps to sort of validate and de-risk effectively what I believe it was Virgin Orbits, or was it Virgin Galactic at the time? But Virgin's entire thesis of igniting and launching from high altitude to reduce the total cost of launch. So more fun stuff there. It'll be interesting to see how Starship, I'll say brute force approach of bringing down launch per kilogram through sheer magnitude of launch capacity winds up stacking up to some of these more innovative solutions of launching from different altitudes and finding new ways to get mass up on orbit at altitude.
Yeah, I mean, it is a very similar concept. Getting the payload through the atmosphere in some way or another is very similar to how Virgin Galactic planned to operate. I think you're right. It's Virgin Orbit. I always get mixed up. Like the Pegasus launcher that we saw talked about the other week with Catalyst Space. We talked about a balloon launch rocket last week, so some high altitude platform stuff. It's great to see that a lot of companies are still trying to tackle this problem, because if they can figure it out, it is a great shift in the way that we do launch, and it's potentially environmentally more friendly and better scalable. and has broader implications for space architecture in general. A lot of these kinetic, electromagnetic launchers are really useful in places without an atmosphere, such as the moon or Mars. And that's where I get really excited about this technology being possible, but there's no money to be made there yet. Hopefully in the near future, but the best we have right now is to be testing on Earth. I think there is some interesting interplay with the other topics that we talk about, particularly with these electromagnetic launchers, because I know spin launch has shown that their rocket that gets the payload to space uses the liquid propellant booster after the spin loses its speed. And I guess if they say it works, that works. From what I've seen, it's like 90 G's of force. I'd be surprised if any sort of mechanical system survives that, but I'll believe it when I see it. With an electromagnetic system, I think it's going to be even more challenging. All the metal in those kind of systems, I don't think would survive that kind of environment, whether the heating or just the magnets pulling apart. So I would be interesting to see if they propose a similar solution to spin launch with liquid boosters, or if they actually kind of pair well with this solid booster growth in solid booster technology. I think solid boosters actually make a lot more sense in these applications. They can survive high Gs, they can survive electromagnetic environments, and pairing solid boosters with these kind of kinetic electromagnetic launchers would be really useful in getting supplies to orbit, which are going to become even more important soon as we get on orbit manufacturing and refueling and persistent space architectures more developed.
Yeah, there's definitely a trade-off in the complexity of the payload booster that's being launched and the likelihood of that payload booster surviving the actual launch, be it via spin or via railgun. There's definite value in simplifying that additional late stage booster, or I guess second stage booster, if we're just going to say that the railgun or the spin launch itself is the first stage. So keeping that second stage as simple as possible makes a whole lot of sense, be that liquid, solid, or hybrid. I think at this stage, it's pretty unanimous consensus that solid state boosters are the most well-known, the most established, the most de-risked. So it would make sense to see that wind up being sort of the first foyer into these alternative second stage boosters moving forward. Speaking of new boosters in the ecosystem, a fun little startup out of Germany, Isar Aerospace, won a contract to launch a European technology demonstration satellite, Sigma YNDEO3.
Syndio. To look that one up.
That's Sigma.
It's Sigma, but if you read it in Greek, it sounds like Syndio. I learned this in Greece last month. I was trying very hard to read their signs, and it took me forever. It's pronounced Syndia.
All right. Well, you'll have to forgive me. I wasn't in Greece last week or over the summer, but Isar Aerospace is launching the demonstration satellite Syndio-3 on their Spectrum rocket in late 2026. And we're always happy to see additional launch capability and additional launch capacity come out. It is the single most critical aspect of the space economy, and seeing a lot of resilience and a lot of diverse players and capabilities in that ecosystem is absolutely core. Additionally, out of China, the Juke 3 made it to orbit, but was unable to recover the phase 1 launch. So Juke 3 was launched earlier this week, successfully delivered the satellite in question into orbit, but they weren't able to stick the landing. The booster was not recovered. The stage 1 booster was not able to be recovered. And it just highlights the fact that this is still hard. This is really challenging stuff that we're talking about, recovering and recycling rockets that have been launched out into space. But the Juke 3 is one of 3 of China's major space enterprises, 3 of their 8 major launch providers that have that have approached or are scheduled to debut flights by the end of the year, I believe. So there's the Juke 3 out of Land Space. There's the Long March 12A from the Academy of Spaceflight Technology, and the Shanghai Academy of Spaceflight Technology, and then there's Space Pioneers Tianlong 3, all of which I believe are scheduled to launch before the end of the year. Juke 3 successfully deploying, though not successfully recovering, just earlier this week.
Yeah, I think it reflects China's efforts to kind of diversify their suppliers to make sure that, if one's not making it on time, the other one could potentially beat them there. It's not so much a competition amongst them. It seems like China allocates enough money for all of them to succeed. But it is interesting to see who makes it there first, because it is kind of neck and neck. These are all medium lift rockets. The Long March obviously has more heritage than the others, but they have so many different variants. It's hard to keep track of, where each one is and its kind of maturity. So the ZK3 is definitely one of the more interesting ones for us to watch. It's pretty close in design to the Falcon. It's a Keralox lower and upper stage, and it's supposed to be reusable. But same thing kind of goes for the 12A. I believe the Tianlong 3 is also Keralox, but I know one of these companies is working on a Methalox rocket, which would put them more in competition with New Glenn, or I believe in future generations of like Starship.
Very nice. Well, not far away, South Korea successfully launched their first sovereignly developed rocket. The Nuri-1 launched and successfully deployed the payload and a multitude, the primary payload satellite and a multitude of different CubeSats onto orbit. It was contracted to a Korean engineering firm, a private firm contracted from the government, which indicates that South Korea is looking at potentially developing and implementing a similar sort of public-private partnership that the US and Europe have done throughout most of their launch infrastructure, leaning more into sort of that Western approach rather than the approach that China has developed, which is primarily government funded, though sort of dispersed as necessary.
Yeah, this is actually Neri's fourth launch. The first one was failed. This is their third successful one. So it's actually a pretty operational stage now. It's considered an operational rocket, which is why the handoff between the private contractor and the government operators is kind of happening now. It definitely signals a huge step in space maturity for South Korea. They've, as pointed out, dependent on other countries for their launch capabilities, but this gives them some small lift capabilities to start getting satellites up there. And I'm sure it has North Korea shaking in their boots, seeing their southern neighbor being able to send stuff up into the sky that far. But as far as I can tell, this is a purely space-based effort. So it's exciting to see that South Korea can start implementing some of this, because more of what it's used for, particularly the ComSat, is for Earth imaging. So it should give them some capability of domestic defense and new technology development. So South Korea is not the only country that's putting some money behind Earth observation. Yeah, as we've talked about in the past, this is it's a pretty hot segment of the industry, but it's relatively small in comparison to other segments like launch and like telecommunications, and to a growing proportion, space infrastructure. But nevertheless, there's still some movement here. There's still some funding. There's still some technological growth. Marble Imaging raised $6.2 million this week by TGF, BBM, and Lightfield to build out their Earth observation satellites. So this is a European company building out one of the, a European sovereign Earth observation platform. They're going for a higher persistency, a higher revisit rate, just trying to get some more domestic Earth observation kind of commercial capabilities. So I think it looks to be kind of a competitor to the Planet Labs, since there certainly exists like government-owned Earth observation capability, like the Sentinel satellite. So this isn't Europe's like first foray into Earth observation, but it's one of the companies that are trying to grow their commercial side of things. Planet and Space Dots have been selected as the first cohort of the ESA Phi Lab UK. They received £380,000 in seed funding for projects to use AI to address sustainable agriculture and space environmental challenges. This is showing more that Europe is on the same path as the rest of the world of kind of transitioning away from just putting up Earth observation hardware and trying to get more value out of the images that they can collect. We've seen this a lot with Planet, where it's less about trying to get more revisit rate, more imagery, all of that, but more about getting value out of it. Same thing with Digital Globe. A lot of their money comes from services that are built on top of the imaging capabilities. So I think with Europe, it's a bit more of it being developed in parallel, but seeing that they're spending money on the hardware and they're spending money on this AI software to develop more use case out of it, like sustainable agriculture, is great to see. It's pretty well coordinated. It's again interesting to see ESA kind of funding UK efforts, but it's good that there's still collaboration between the EU and UK despite their split during Brexit. On the other side of the pond, we've seen some major movement with a company we know closely, MDA Space. It used to be part of the Maxar mafia. Well, we were there. They bought SSL back when we were there, and then Digital Globe bought all of them. And then it was Maxar, and then it was Vantor, now it's a bunch of different things. So the MDA Space is still at it. They had worked on Radarsats a few years ago. It was about $1 billion contract to build a couple of Radarsats and launch those. Those are out there operating well, but it looks like they're working on a resupply or a extension to that mission. MDA Space won 44.7 million Canadian dollars, which is less than American dollars, about 32 million American dollars. Contract from the Canadian government to supply parts for a new Radarsat Earth observation satellite. So certainly a good signal that those satellites are working well. At the same time, MDA Space announced that they're offering 250 million Canadian dollars senior unsecured notes due by 2030. So it certainly looks like they're gearing up to build out these kind of capabilities. We've seen a lot of this with Canada recently. They're starting to spend a lot more money on themselves, on EU, as well as their partner there as well. Just like UK kind of being outside of the EU, but still partnering with them to develop these sovereign capabilities. It looks like MDA Space is positioning to kind of capitalize on that. And the Radarsat's definitely a good indication. As we've seen that radar capability be emphasized by Europe as well, particularly with the Iceye raise of 150 million euros. That's just their Series E. There's a 50 million euro secondary placement. It was led by General Catalyst, and this raises their valuation to an astounding 2.4 billion euros, which is really big for the space industry, particularly for a new space company. It's not, one of the large stalwarts like Thales, Airbus, Northrop, Lockheed. So, we're not talking doing missiles and defense and those $100 billion industries, but they are a pure satellite Earth observation synthetic aperture radar company. And they're now valued at 2.4 billion, which puts them in a pretty rarefied air for space companies. I was hoping you kind of dive more into this company because I think the implications here are a bit broader than just a Series E raise, especially given all the news we talked about recently with them.
Yeah, absolutely. I mean, specifically for Iceye, I mean, the fact that they've raised 200 million at a 2.6 billion dollar pre means that they're effectively raising on less than 10% dilution, which is super duper favorable to everybody already on the cap table. And all that I'm saying here is that everybody involved here thinks the numbers are going to go way up. Everybody involved here thinks that they're getting a steal at a 2.4 billion euro valuation here. Now, what's interesting is that Iceye raised, I believe it was 130 million euro, but they raised a little bit less than they raised last year in 2024. That was an implied valuation at roughly $1 billion. So in 12 months' time or 18 months' time, I think the previous raise might have been in the summer. So in 18 months' time, they've raised maybe they've raised maybe 50% more money, 30 to 40% more money than that previous raise was, but saw a 3-time valuation step up, which is just absurd. And what this is clearly derived from is the massive increase in defense spending that we're seeing throughout Europe and the ESA, and also globally. So we've spoken about this previously. We've pointed to the fact that militarization and defense spending often goes hand in hand with SAR data. And we've pointed to the fact that Japan has increased their SAR purchases and their SAR market demand over the last several months, and that Europe was seeing similar stuff with tensions and conflicts globally running high. The geopolitical influences are pushing towards a lot of, for lack of a better term, sort of defensive militarized data. And SAR is currently the gold standard for that data. So the fact that Iceye has built the world's largest SAR constellation, they've been building for this sort of conflict state for years. And it's being lucky is hard work. And Iceye is very lucky, but they've put in a lot of preparation, and they're in the right place at the right time for this. So, I mean, congratulations to them. But a 200 million euro raise at the $2.4 billion valuation means that folks are anticipating that their revenues are going to increase. I mean, they're already profitable today, but folks are effectively conveying that they believe that Iceye's revenues in the near future, over the next, I'll say, 7 years, are going to wind up increasing between 5 and 10x easy. It's a really impressive vote of confidence, and it's a massive, massive indication of the demand of Iceye's current product offerings. And on top of all of this, Iceye is mentioning that they want to get into the Earth observation and SIGINT capabilities, building some more Earth observation and signal intelligence satellites. But I mean, I personally would just focus on their core product, just the SAR satellites, and think that this is a massive vote of confidence and a massive validation of the thesis under which Iceye was sort of founded, that this SAR data is valuable, that the SAR data is important across a multitude of different use cases, though primarily defense and primarily national security. And that has been proven out almost in its entirety. I'd estimate that maybe sort of 20% of this sort of upside that we've been talking about, the 20% of sort of the growth, is going to wind up coming from Iceye's Earth observation and signal intelligence capabilities. But I think a raise like this is indicative of the status of the product as it is today, and that product growing and capturing more market share, rather than it is sort of the more speculative stuff that we see in a lot of seed and pre-seed raises, where folks are raising money so that they can go out and build a piece of technology that will then capture some amount of market share for that product market fit later.
Yeah, I think this demand for sovereign capability is a huge driving factor for this company. I think we've talked about it before with their partnerships with Japan and their kind of growth in the Southeast Asia region, and the partnership with Rheinmetall and obvious growth in the EU, where they're a part of. Just from personal experience, like I think some of the value of SAR that's not often talked about from the American perspective is that it can see through clouds. I mean, it's a pretty obvious one in terms of when you talk about the technology frontier, at least tech standpoint. But I think when it comes to like actual value to a country standpoint, it's one of the key factors. And I've kind of been noticing that pattern with the countries they partner with. A lot of the times when I do Earth imaging over those countries, there's clouds that get in the way. And there's been discussion from those countries about getting higher revisit rate. A lot of these satellites are being put in sun synchronous orbit just because they're hitching a ride on the transporters that go there, and they don't really have the capability to change the orbit. But that means that they're imaging a lot of the Earth that nobody really cares about, or the people that are paying for it don't really care about. So I think there's going to be a lot of discussion about how to improve the revisit rate around certain regions that are interests of the country that are paying for the satellite, which I think would really improve that key capability of being able to see through clouds and having like a persistent image of the region you're interested in. Being able to change your orbit to something like a Maya orbit where you're still low Earth, but you're able to have more time over your target area, would certainly improve the value derived from those satellites. And I know that their CEO is talking about expanding their offerings outside of just synthetic aperture radar into like Earth observation and signal intelligence, so kind of getting into a broader space awareness kind of architecture. So I think there's definitely going to be some changes to the company. I would expect to see a lot of this money go towards developing new capabilities for their fleet and their satellites. And I think that would certainly support an increased value of their company and the potential for future growth.
Moving on to some business developments throughout the space, couple of quick hitters here. But so Reditus Space, Reditus, announced a $7 million seed round for reusable re-entry vehicles. So Reditus is a new space company. They're proposing reusable re-entry vehicles, and the purpose of those vehicles is basically to provide a substitute product to the ISS or to on-orbit space stations. So you have a scientific or manufacturing or pharmaceutical or research payload that needs a microgravity environment. You work with Reditus Space, who hosts your payload on their orbital reentry vehicle. You get up there into orbit, and then they're able to come back down rapidly. Now, fundamentally, they are developing some similar technologies to the ones that we see in the satellite reentry space. There's folks working on providing reentry vehicles for existing assets and wanting to provide assets that are customized but able to be deorbited and recovered and then refurbished. So interesting and good to sort of see that there's money and investment going into prioritizing this. Anything that effectively reduces the capital requirements or the capital intensity of getting a satellite up and into orbit, anything that makes access to space and space hardware cheaper is a good thing for the industry overall. So glad to see that and to see the progress that they're making there. Additionally, the Missile Defense Agency awarded Proteus Space a prime contractor role on a $151 billion MDA Shield MAIDIQ. What does all of those acronyms mean? What does that letter soup mean? It means that a small startup, Proteus Space, based out of the Rocky Mountains, has won a prime contractor role via the Missile Defense Agency. So I spoke with the founder of Proteus Space a few years ago in Chicago, and their whole focus was on, at the time, their whole focus was on rapid turnaround, getting things from a 2-year lead time from contract to orbit to a 2-week lead time from contract to orbit. Point being that the improvement and the rapid turnaround time from increased manufacturing capability is, and it's an awesome improvement, and it's super valuable to the entirety of the ecosystem. But it's really impressive to see that a company that was so focused and small, so focused on that manufacturing capacity, has already managed to win a prime contractor award in such a specialized and niche space. So government has for a long time been looking for ways to deploy sort of capital. Government has for a long time been looking for ways to get money into the industry and into the ecosystem more efficiently and more rapidly. And it looks like it looks like that process is being improved.
So you think Proteus could be kind of like a middleman, like distributing out this money to all of its subcontractors? Because they are like an integration company, right?
So Proteus Space is now a prime contractor, and the way that works is that the prime contractor sort of subcontracts out and does effectively systems engineering level work rather than, as the name might imply, primary engineering work. So I would anticipate that Proteus Space, who started off in this rapid manufacturing, rapid turnaround, super quick response time mindset, I would imagine that the relationship is going to involve them being a key contributor at the systems engineering and, in your words, sort of integration layer. And I would imagine that they would be sort of subcontracting out the individual components and the unique sort of bespoke nature of the different satellite missions as they are needed. But I would envision Proteus Space to sort of add value at the systems engineering and the integration layer, and that they would effectively be sort of optimizing the platforms that are optimizing and tailoring existing platforms to the mission needs at hand.
Well, I will know MDA was they made a specific announcement that this is not a Golden Dome initiative, so I would expect it to kind of be supplanted by some of that once it's more clear what that looks like. But it does put Proteus in a very nice position to kind of grow into that and potentially win some of that money on top of this contract.
Very true. Maybe this speaks to a flaw in my thinking, but if I'm Proteus, I'm not too worried at this stage about winning more contracts or money. I'm focused on executing on what we've got. But you're absolutely right. So another fun update. We've spoken about Ascendark a few times here on the show, building some smaller, more bespoke geospatial satellites. Again, I maintain that geospatial is not dead, but it will be different. And Ascendark is absolutely one of the players in that space. But they have just announced that Space Leasing International has purchased 2 small geosatellites from Ascendark. That deal is valued at about $200 million US. And SLI is clearly sort of betting and indicating that operators are going to lean towards leasing hardware rather than buying it outright. And there's a couple of indicators that sort of point to this thesis being validated, having a little bit of there to it. I'd highlight sort of Astranis and Loft. Both of these companies sort of make their own hardware and wind up leasing capacity and effectively leasing that hardware to the end customer rather than selling the hardware to the end customer themselves. That sort of leasing model, again, effectively decreases the total capital need for the end customer. So there's reason to believe that these massive capital-intensive assets would wind up finding more value in financing or in leasing-based models than in outright purchases. But we'll have to see whether or not the market demand shifts that way in the timeline that SLI needs in order for this purchase on their end to wind up making them a buck. But there's a couple of different companies that wind up leasing and providing hardware capacity and hardware assets. SLI is one. GapSat comes to mind as another. And it's fun to see some of the new space economy getting into that ecosystem and getting a win under their belt. So congratulations to Christopher and the team at Ascendark. We love to see it.
Honestly, I'm kind of surprised Ascendark would want to do that though, because then SLI becomes a competitor to them, right? Like, they eat into their market by leasing out to potential customers instead of having them buy from Ascendark.
I mean, I guess that's a very cynical way to look at it.
Yeah, you know me.
Like, the way that I would look at, if I'm in Ascendark's shoes, what I'm looking at is that this is sort of a this represents one of the sort of first customer sales that we can make. So it's a huge win no matter how you slice it. And honestly, I'm kind of indifferent as to whether or not I want to be selling to a company that operates the satellites and leases them to an end customer, or whether I'm selling them directly to that end customer. I'm kind of indifferent to that, as creating sort of partnerships with those middle persons, like creating a partnership with an SLI, would definitely be a faster path to revenue. It'd be easier to create a partnership there. Okay, great, you bought 2 from us. That worked out well for everybody. Everything worked.
Yeah.
Let's increase the order. Let's get you 10, right? Like that sort of land and expand sales cycle and growth makes a whole lot of sense. And it's a single account that you need to worry about. So, maybe there's some aspect of, well, if we're selling to SLI, then we're not selling to Harrison and Paul, who are ultimately our end customers. But if we're selling to SLI, then we don't have to sell to Harrison and Paul. That's SLI's problem. They get to deal with all of those different points of sale, and we get to just focus on crushing the hardware and the manufacturing side of things, which is what we're doing.
Yeah, I think that's fair. It depends on kind of what the market looks like. It's certainly, I think, use case dependent on whether somebody want to lease or buy. So it could just be that they're not even really competing for the same people.
Yeah, that's fair. I mean, I
just feel like there's a bet being made here. Like if the Ascendark kind of like makes their money back, but not too much money, then like everybody's happy. If SLI makes a bunch of money back, then suddenly Ascendark's missing out on all of this money, which could, I don't know if it would trickle back to them on this kind of contract structure.
I mean, maybe, but again, this is 2 geo satellites, so this is not.
Yeah, I guess I'm just really interested to see how this plays out. Like, I want to see if SLI orders more, or if this just doesn't work and they never order again, and like what other customers Ascendark sells to. Like if this was the idea that catches on.
Yeah, I mean, I think what's more likely is if, for example, let's say that this goes super well, right? If I'm SLI, I'm actually scared that Ascendark is going to take a look at my meaty margins and say, hey, we built this. That's the hard part. We could just, and we're effectively selling to the same or similar customers. We can just integrate this and start offering, we can just start operating these satellites ourselves.
Yeah,
I think it's easier for us to build that out than it is for SLI to build out their own hardware manufacturing stack. So if for whatever reason we get super unhappy with this arrangement, there's a lot of leverage that Ascendark has until SLI winds up dealing with 24 other geospatial satellite manufacturers, and they all wind up sort of competing with each other in that capacity. But Ascendark are the only folks building this type of asset and building this type of a satellite.
Yeah, so, I mean, the Stranus and Swift 12, but I don't know. I guess I'm like more interested in this in the field here than I thought. Like, because this is very much like what SpaceX does, like with spaceflight. How spaceflight was making money off of aggregating launches, but then once they made enough money, SpaceX was like, we're just going to do that now, and then just kind of took over the business, and spaceflight lost all their business to them. What I'm wondering might happen more is that these are really early companies. Like SLI and Ascendark aren't big like SpaceX. So it feels much more like a race of like who makes more money first, and whether one buys the other or whether they partner in the end, or if this just continues to be a customer relationship with a spacecraft, producer.
Well, I mean, longer term, I mean, to your point, Astranus is building sort of similar class satellites, but as the capabilities of an Astranus satellite and the capabilities of an Ascendark satellite are very different. So similarities, but yes, we are both human, but nobody is you and nobody is I, or something to that effect, right? So
Yeah.
there's enough differentiation between the companies, I think, to say that their products are not likely to commoditize one another.
Yeah.
Right? Nobody's going to swap out an Ascendark bird for an Astranus bird and do so without any sort of friction or pain points there. That's they're different enough that that's still going to be a big lift.
Yeah.
But to your question, remind me of your question.
Just like, I guess let me put it this way: if you had like $10 million to invest, but you can only invest in one company, which one would you choose? Actually, no, you don't have to invest in one company. Would you choose Ascendark, SLI, Astranus, or would you split it some way between the three?
Okay. So I see what you're saying. So, if I had to choose one company, I would probably. It depends on timeline. I think in the short term, SLI will do. I think in the short term, SLI will do well. I think there's demand for the leased asset model in space. So I think SLI will be able to find customers. They'll be able to, assuming everything works without issue, and if everything goes super smoothly, I think SLI will do very well. I think that Ascendark will also do well, but I think that Ascendark right now is solving a more challenging problem than what SLI is solving. The problem that SLI is solving is an operational one. The problem that Ascendark is solving is a physical and manufacturing one.
Yeah.
So 20 years, I would rather have money in Ascendark today. 5 years, I'd rather have money in SLI today. The reasoning being that over time, I think it likely that one or both will wind up encroaching on the other's ability. And when we get to that state, I think it's going to be much easier for Ascendark to build out the operational capabilities, to build out that leasing skill set, than it will be for SLI to build out the satellite manufacturing skill set.
Yeah.
So,
Yeah, I think you kind of pulled me around your original point, and I think the main thing I would point to is the fact that like EchoStar and SSL both sold this past year for drastically different amounts of money, but they're effectively in the same relationship. One's an operator, one's the producer. So I think historically the operator is the one that makes the most money, but it's symbiotic. Like they both are going to need each other.
So I would say that I think a big part of the reason why SSL wound up selling for in comparison to EchoStar, wound up selling for such a meager amount of money. And I would also sort of point out that EchoStar wasn't sold. They didn't sell based on the merits of their company. They sold because they were sitting on Spectrum, and the value of Spectrum absolutely popped as the D2D market developed. So I think there's a little bit of sort of like an apples to oranges comparison there, just because so much of EchoStar's valuation is affected by the fact that they found, like, they discovered oil in their backyard. You know what I mean? Like, hey, the house isn't actually worth all that much. We just care about the oil.
And then SpaceX is like, I drink your milkshake.
A little bit. So my point here is that sort of, one, the EchoStar valuation is inflated based on the merits of the company, and two, that comparing SpaceX, or comparing, not SpaceX, I apologize, comparing SSL, who was working more or less, I mean, in all the time that we were there, we were basically working on pretty commoditized products, right? You could go to SSL, you could go to Ball Aerospace, you could go to Digital Globe, you could go to a multitude of different companies and basically get the same product, right? At this point, the new space, the Astranus, the Ascendark, the small to medium-sized geospatial satellite industry is so nascent and different that you don't get that sort of commoditization. So margins at SSL and at all of SSL's competitors were razor thin, right? Like you just didn't make money on anything. You're able to make money on this stuff because you have competitive advantage, because you have a product that provides different value add than the other folks on the market are. So what I would point to is that yes, SSL sold for a small amount of money, relatively speaking. I'd say that's largely a reflection of the fact that SSL's sort of competitive advantage was relatively slim in a pretty darn competitive market and a pretty darn competitive sort of layer of the ecosystem. I would also point to EchoStar having the figurative oil well in their backyard as like, yeah, that doesn't necessarily mean that the right bet is on an operator. Those two things being said, I still think that SLI, because they're not, to my knowledge, they're not planning on operating the satellites themselves. They're leasing the satellites to the end operators, who, for all sakes and purposes, are likely to be the end customer.
Yeah.
Most end customers will operate their own satellites or will want to operate their own satellites. I don't think SLI is trying to lease stuff to the consumers of the data products themselves. But so I think that it's easier for a manufacturer to vertically integrate and absorb the operator and the leasing side of the shop than it is the other way down. So that's if I could save you the last 10 minutes of rant of your life, that's how I would try to do it. I'd say it's going to be easier for Ascendark to do SLI's job than it is for SLI to do Ascendark's job. You think that you would rather put your money on SLI than on Ascendark for a long timeline?
I think they're both screwed. I think they're just spending money on a dying asset. I think medium term where things are shifting is a hybrid structure, like LEO with a geo backhaul. Like, I think building these geo satellites for pure Earth play makes less sense than trying to spend your money on geo to connect to LEO satellites.
Gotcha. So you think fundamentally geo-based Earth observation is done?
But geo telecom, I don't think there's much geo Earth observation. But geo telecom, I think, is dying out, and has been, and it will continue until it's gone. And at least in any form that we've seen it.
Sure. Wait, so then what you're describing of geo being sort of an infrastructure relay layer for LEO, you wouldn't refer to that as telecom?
It's still telecom, but like not geo telecom as we've seen it. Not like
okay.
Because like the way it works now is the geo satellites typically relay to a ground station that's like LEO satellites typically communicate to a ground station that's at polar latitudes, but geo is typically somewhere in the latitude that's near the region they're serving. So I think there's just like this, they've got weird look angles, like if you're servicing South America, but they all sit at the equator. Like having a high look angle drops all this bandwidth, so you lose all that value. You have to build the ground stations down there, then you need the ground infrastructure to port it around. Like none of that, all of that goes away once you have a LEO layer. You can talk to LEO satellites anywhere. You don't lose any of your signal because you're not going through the atmosphere. You don't have weird look angles. Those LEOs can then relay it to however they want with these like laser comm terminals, or they bounce it around until it hits one of their polar things, and then they have the whole infrastructure to get it to where it needs to be. So I think, to me, it's just like it's an old technology, and we haven't seen it fully replaced because LEO constellations haven't fully permeated. But once they do, it just seems like old tech to keep using.
Okay, so what I'm hearing you describe is that you think that the fundamental technology itself is being outstripped in capability by other solutions. And I'm going to sort of fill the gaps and say, like, in addition to that, the price point is not competitive.
Yeah.
Like, are both of those fair statements. I'm not putting words in your mouth.
I think that's fair.
Okay.
I don't know the price points exactly, but I would say like a Starlink terminal on subscription is probably less than a Dish like subscription, and gets you more.
Sure. Gotcha. Okay. Interesting. Yeah, we do have some differing opinions there.
But I think like we just haven't crossed that threshold yet. Because like we talked about last week, Viasat launched a satellite with a terabit per second downlink rate, whereas Starlink's not going to reach that rate until its next generation. I think once those align and we kind of cross that boundary, and more of these optical terminals come online and the chips that can support direct device come online, then I think Geo's dead.
That's fair. I mean, I think that the capability race isn't yet at parity. I think that there's still stuff you get from Geo that you can't get from Leo. I do think very much so that the price point is more or less a deal breaker. Like the fact that Geo costs so much is what's killing the industry. But if Geo were able to cost like 10%, if Geo were able to cost 30%, then like, hey, game on. And so like that's where my head's at. And I think we're seeing a lot of innovations led in part by our friends at Ascendark that are effectively sort of bringing the price point for Geo way down.
Yeah, I think if you're getting at the capability cost kind of trade off, I think it depends if it's a commercial customer or like I don't know, a user, like a business. I think would care about one more than a person. Like,
so Transcelestial has expanded its total funding to just under 35 million, with an additional close of its latest round right around 10 million US. And Transcelestial is working to collaborate with JAXA to advance laser communication applications for HAPS and low Earth orbit satellites. HAPS being high altitude platform stations, much like the Kepler demo. And we're excited to see HAPS and LEO satellite assets get access to more advanced laser communication. As we were talking about earlier, the infrastructure and the infrastructure layer on the terrestrial side of things is instrumental in the telecommunication and downlink layers for satellite communication. So we're happy to see that.
Yeah, always interesting to see all the high altitude stuff coming back up again. I think Project Loon already attempted this, so I'll be surprised if JAXA can figure it out, but JAXA's figured out stuff that the US hasn't. So I'm hoping that this works because it gets rid of a lot of the cabling problems when you have to route stuff around there.
Absolutely. To briefly go back to Europe, I wanted to talk about Marco Fuchs, the CEO of OHB.
Oh, that guy.
Yeah. So more pork barreling, more Euro Cup playing out in the European space industry. But so Marco Fuchs is helping to participate. He's participating in the antitrust process against the proposed merger that we've spoken about between Airbus, Thales, and Leonardo. And he's aiming to make the case that the merger would be bad for the European space industry. This is nothing that we haven't seen domestically here in the U.S. We've seen Amazon and SpaceX get into shouting matches. We've seen the two of them both go and complain to the referees about how money is being allocated or how government spending is unjustly favoring one over the other. So it's perfectly natural to see and expected to see this playing out in Europe. But to the consortium's credit, they are trying to compete with SpaceX on a global scale. Now, while the antitrust process is focused exclusively on the European market, they're not necessarily looking on a global scale here, the implication is largely anticipated. the likely outcomes are that if the antitrust winds up passing and blocking the merger, that will long-term be better for intra-European space and business efforts. However, in the short term, the European space industry's relevance and prominence on the global scale will wind up suffering and taking a hit. So not to say that this is sort of like the bifurcated A or B outcome, but those are sort of the arguments in favor of the merger and in favor of the antitrust regulation. The big challenge here is that they are competing with SpaceX, who effectively does have that level of market power in the US and to a lesser degree in the global markets, but we'll just have to see how it plays out. Honestly, I kind of doubt that Marco has a thesis as fleshed out as wanting to better the long-term sustainable future of the European space. I kind of get the impression that he wants to win more of the ESA money and is worried about OHB being sort of muscled out by a larger merger and conglomeration. Airbus is out of France. Leonardo is out of Italy. I believe Thales is also out of Italy and the UK, but that represents sort of a lot of the that represents a plurality of the donations and the contributions to ESA outside of Germany, and I think that's candidly, I think that's much more where Marco's concerns are about sort of the pork barreling side of things, getting muscled out of contracts and seeing some of the ESA and European defense spending going elsewhere than OHB. Finally here, one of the last things that I wanted to talk about in the business section was the Eutelsat, the shocking 7% plummet in Eutelsat stock price. So for context, effectively what happened here was Eutelsat raised roughly $1 billion in capital. And this money was intended to rapidly improve and accelerate the integration and deployment of the OneWeb project that they've been working on. Now, in that $1 billion raise, in which they raised $1 billion, a whole bunch of people gave a whole bunch of money. The French government doubled their position. They now own, I think, 30% of the effort. They have a 30% stake. A whole bunch of money flew in. So all sorts of confidence, all sorts of valuation, and I believe it was at a 32% premium to the active market rate. So they got a whole bunch of money and a whole bunch of goodwill with that as well. Now, SoftBank, on the back of that sale, almost to the day after the sort of limit on when somebody can sell after a big liquidation event, they sold about half their position. And as a result, Eutelsat's share price dropped about 7%. So again, not financial advice, just a fool with a microphone here, but this very much reads as SoftBank wanting to get a liquidation event. It does not at all read to me like SoftBank is trying to get out of a sinking ship. SoftBank is a bank. They have shareholders. They have a fiduciary duty to their shareholders. Their investment in Eutelsat is doing very well, and so they decided to sell half of it to return a liquidation event for their shareholders, rather than keeping that money deployed. I don't read this. All of this to say that I don't read this as sort of like a vote of no confidence. I don't read this as an indictment on Eutelsat or their execution of the implementation of OneWeb. I view it as SoftBank on the back of a really lucrative raise, wanting to get a liquidation event, which they while they have not publicly stated the reasoning for wanting to do so, needing and wanting a liquidation event for shareholders is a perfectly valid reason for selling half of a position in a company.
Yeah, maybe they can get the $500 million back from that WeWork CEO. He's got a lot of stuff, thanks money still, right?
I don't know. I thought I remembered seeing that he was living in like the tax haven of like Cleveland or something.
Oh yes, famous tax haven, Cleveland, Switzerland, right?
That's the one.
Yeah.
That's the one. Yeah,
It's beautiful this time of year.
it's beautiful every time of year in Cleveland, Switzerland.
So to wrap things up, we'll go over technology advances for this week. These are topics that kind of fall outside of business news, aren't particularly tied to any one company or any pattern that we're seeing, but are still interesting and fascinating to talk about. One of the kind of topics that doesn't come up often, but came up twice this week, which made it particularly interesting, is nuclear power. It's been a long discussed topic in the space industry. It's not particularly common, given that the risk of blowing up nuclear material on a space launch is particularly scary. So the only people that do it are NASA and government agencies that we probably don't hear about. But there's been more discussion recently as to the need of nuclear power if we are to become a spacefaring civilization. A couple of companies that are pursuing this effort are Antares and X-Energy. Both of them raised money this week. Antares with a $96 million Series B funding, and X-Energy with a $700 million Series D funding. Both of them are building small modular reactors. These are not particularly designed for space applications. It seems that the economic demand is actually coming more so from the Earth with data centers, and not tie too much. Originally, it didn't tie too much to space because when they started pursuing this, there was no real discussion of on-orbit data centers. However, that is an interesting connection that's being formed now. The issue more so is that there's not enough power to continue building these data centers needed for AI consumption. So nuclear power is getting large investments again. It's getting investigated seriously for the first time in a long time. And a lot of these nuclear companies are coming up with new technology to improve the safety and capacity capability of these nuclear power plants. I believe both of these are doing nuclear fission, and both have expressed intent to develop technology for space applications. So this should be particularly useful for long duration travel and lunar and Martian exploration and habitats. So X-Energy, I've been following for a while. The CEO or chairman is Cam Gafarian, so also the chairman of Quantum Space and Axiom Space, who are habitat and space infrastructure builders. So I expect that whatever technology comes out of that company will tie in very nicely with the broader space infrastructure plans of those companies led by the same person. Defense tech firm Shield AI, known for its autonomous aircraft HiveMind system, is partnering with space software startup Sidero to adapt the technology for satellites. This is something we've discussed a couple times over the past few months, which is the express need for an improvement to effectively space traffic control. The technology is fairly outdated. It is handled by the Space Force primarily. There are a few companies that handle it for commercial customers, but typically it's to augment the Space Force's capabilities. So companies like Kahan Space can track satellites, but there's a real need for an improvement to this technology. There hasn't really been an upgrade since a couple of months ago, and L3 Systems deployed new technology to Space Force, and I believe that Shield AI is not an American company. So there's some interest from across multiple countries to improve this, but it's going to be a multilateral cooperation effort so that we're communicating well. Somebody doesn't launch their rocket into another country's satellite, and we don't end up freaking out about exploding rockets and space debris. Reditus Space secured a subcontractor role with Mob Space on a NASA Sivir radar initiative. This is to develop a radar capability on orbit. So the same vein of space traffic control, they're developing new hardware technology that would go on orbit to deploy what they're calling a 4D radar capability. So pretty similar to how we do radar from the Earth. You send up radio waves, you detect what they bounce off of when they come back, and that's how we track satellites for the most part. We have been talking a lot recently about observational payloads that are able to augment that capability and get more detail out of these space assets and also space debris. It sounds like Reditus Space and ModLab Space are pursuing both applications, so tracking for space domain awareness purposes and for debris tracking purposes. So always happy to hear about new debris tracking capabilities. There are not any, or if there are many, radar satellites on orbit that are looking at other objects on orbit. We talked about synthetic aperture radar a couple times on this episode, but that's Earth's observation. So this would be a pretty novel application for radar technology, and one that I welcome and hope that it goes well, because the SBIR is a pretty early funding effort. So they're going to take a few years to develop this technology, and getting on orbit's a good step. Reditus Space has some space heritage, so I hope to see that happening soon. Isar Aerospace and Cosmoserve Space signed an MOU to advance in-space refueling. Isar Aerospace is a on-orbit space propulsion technology company. They've supplied propulsion units to 40, 50 different satellites, so they've got some space heritage as well. Cosmoserve is working on a space debris removal satellite. So together, I think it's a good cooperative effort to give a spacecraft, on-orbit propulsion that allows it to kind of move around in space and grab debris, grab space assets that need to be deorbited, get those out of orbit. Again, I love to see any effort that is needed to remove space debris. It keeps our space environment clean and reduces the chance of Kessler syndrome happening and kind of blocking out whole domains of space for future space flight. So again, I really hope this partnership works out well. In-space refueling is a growing kind of topic that we've discussed a lot, of being getting a lot of attention and funding. And I think it would really advance the technology for both of these companies in terms of debris removal and mitigation.
Yeah, I think the fact that came up in the hearing just earlier this week, and that it was referencing the Shijian spacecraft pair that docked and successfully reorbited or refueled on orbit as well. Like, this is something that we can do domestically here in the US, and it's something that if we want to remain competitive and prominent, it's something that we need to do. So it's good to see that Isar Aerospace and Cosmoserve are both working on this, and that we have people and teams solving this problem from the private sector.
So that wraps it up for this week's episode of Space Times Podcast. I've been Harrison Lambert. Here is Paul Mayer. Thank you for joining us this week to hear about all the exciting times in space. If you enjoyed, we hope you'll join us again for next week's episode.